Hello and welcome to the latest episode of Zach's Tech Talk Tuesday. My name is Ryan McQueeney, and on this week's show, we will be taking a deeper look at two possible upcoming tech IPOs that represent two sides of the industry's coin, Airbnb and Palantir Technologies. First, let's talk about the current state of the IPO market and what types of trends we have seen recently. The US IPO market witnessed 44 individual deals, generating $15.6 billion in the first quarter of 2018, its best three-month quarter in 3 years. The biotech and technology industries led the way, accounting for 13 and 10 deals respectively in the period. Around the world, IPO markets raised about $43 billion in the first quarter. Among the major tech IPOs were digital storage unicorn Dropbox and Chinese video streaming platform IQ. I'm just going to use the ticker there so I don't stumble over the name of the company itself. Paired with Spotify's debut, which fell shortly after the first quarter, these companies helped establish a trend of massive private tech companies marking major splashes on the market in the early days of 2018. And of course, Spotify's IPO was noteworthy in and of itself. Spotify debuted on the New York Stock Exchange in early April, with the Swedish music company doing so through a unique public offering called a direct listing. Whereas most companies hire banks to underwrite their offerings and find IPO buyers at prearranged prices, Spotify simply allowed existing shareholders to sell all or some of their stock to the public. Spotify's first day of trading valued the company at $26.5 billion, making it the 8th largest photo-sharing startup. Snap Inc. debuted in 2017. Whether Spotify's direct listing inspires other big names to pursue a similar type of IPO remains to be seen, and we'll touch on that in a little bit later with one specific name who might be inspired by Spotify. It does seem like investors can expect the rest of the year to be packed with plenty of new deals. According to analysts from Baker McKenzie, worldwide domestic IPOs are expected to peak at over $220 billion in 2018, while US IPOs are expected to generate about $78 billion. Another interesting IPO trend to emerge recently involves the size of deals. First quarter IPOs raised about 28% more cash than the year-ago period, but 287 listings in the quarter actually marked a 27% decline. So just to reiterate, that's less deals, but significantly more money raised. So we can assume that we're seeing more of these big names and some of these unicorns kind of being more prone to go public right now than we had seen a year ago. It's interesting to note that that year-ago period, the comparative period in 2017, was the highest number of listings in roughly a decade. With this in mind, I want to highlight Airbnb and Palantir because they are among the top unicorns with IPO buzz right now, and to me, they represent the polar opposites of each other in terms of consumer awareness. So I think it's a pretty interesting comparison. Founded in 2018, Airbnb is a sharing economy company that provides a digital platform which enables people seeking lodging to connect with others who have made their personal houses, apartments, guest rooms, and more available to rent. The platform currently has more than 3 million listings around the world, including 1,400 castles, which I find to be fascinating. Airbnb letting you rent out castles. Popular in America too. There's a lot of yurts on Airbnb, so you get plenty of different options. It also operates in 65,000 cities in 191 countries, so definitely has a massive global footprint. And the company says it has provided well over 150 million people with lodging already in its roughly 10-year history. But of course, this disruptive new force in the lodging business is not without controversy and faces several regulatory challenges to its business model in key markets. Again, focusing on the business model here. So the fact that they're kind of enabling regular owners and renters to rent out their spaces without licensing or advertising and regulation that regular hotels and actual bed and breakfasts might see depending on where they are listed. In San Francisco, for example, critics have blamed Airbnb for growing vacancy rates and the over $3,900 average monthly rent. Similarly, the company faces a long-standing battle with New York City. Kind of the same argument there. Hey, you're encouraging people to not actually live in their homes. You're encouraging these short-term tenants, which end up jacking up the price of rent for everyone else, making things less affordable for our city's actual inhabitants. So on one hand, Airbnb presents an affordable lodging option for travelers and allows renters and owners to make extra cash from their unused space, certainly a noble idea. But on the other hand, the platform creates new headaches for landlords and might contribute to growing housing crises in urban areas, not just in the US, but throughout the world. Interestingly enough, this is kind of what I was hinting at when I was saying maybe Spotify will inspire some other direct listing IPOs. The Wall Street Journal actually recently reported that Airbnb was watching Spotify's IPO plans closely and may want to mimic the strange direct listing as a way to benefit its employees and founders without actually raising any money directly. So just to summarize, I think Airbnb is clearly a very consumer-facing brand. It has a lot of name recognition. I would almost call the company a household name at this point, which is certainly something that is very impressive given the fact it's only been around for about 10 years. Its private valuation sees it closing in on some of the biggest names in the lodging in terms of total market cap already, and that's something that an IPO should probably only boost. So it'll be interesting to watch Airbnb go public, as it's one that is bound to gather a lot of investor attention, as we so often see with these household name companies going from private to public. People really love to jump on the opportunity to invest in what they know, which is kind of direct contrast to the second company I wanted to highlight today, which is Palantir Technologies, this private company that I think is really cloaked in mystery and is, to me, the furthest thing from a household name that you'll see on the top of the unicorn list. Founded by former PayPal chief Peter Thiel, Palantir is a data company focused on combating terrorism and financial fraud. Over the past few years, Palantir has emerged as one of the world's premier experts in quote-unquote big data, this new concept that involves the management of immense amounts of real-world data, and more so than just the management of big data, the storage of big data, the organization of large amounts of data, being able to take a certain set of numbers or results or readings or measurements and making it mean something quickly and efficiently and affordably. These types of solutions interest everyone from hedge fund managers to FBI detectives and have a wide range of benefits for being able to scour large amounts of information. I should say there are a large range of benefits that are possible there. And we see this kind of in the diversity of the company's customer base. A lot of governmental organizations, I think basically every branch of the US military, FBI, different law enforcement agencies around the country. We've seen it involved in the discovery of the infamous Chinese espionage networks GhostNet and the Shadow Network. There have also been rumors that Palantir solutions were used in the search for Osama bin Laden, although that was never confirmed. However, it's important to note that they're not just on the public side. I think about 50%, an estimated 50% of net sales these days coming from private clients. So its use in the financial services business and other areas of big data have really started to take off over the past few years. But that's kind of new. Up until about 6 years ago, the company was focused almost exclusively on the public side. Still, Palantir now has a valuation of about $20 billion, making it the 7th largest unicorn in the world. It's going after a really huge market. I wanted to cite these numbers from research firm IDC, which estimated that the global market for big data and business analytics will be worth $210 billion by 2020, and that's up from $151 billion last year. Important to note, however, that industry leaders like Microsoft, IBM, and Oracle have already secured a large slice of this pie, so Palantir definitely has plenty of competition to consider. However, things definitely growing rapidly for the nearly 15-year-old brand. Bookings hit an estimated $3.5 billion in 2017, with total revenue reaching as much as $600 million. Unclear exactly where the company is at in terms of profitability, but I know the CEO has gone on record lately to say that once the company is public, investors will be surprised in a positive way with what they see. So certainly some confidence there in terms of revenue and margins. However, no clear path to an IPO yet, no clear plans just now. I would say in terms of some of the rumors I'm seeing, some of the forecasts I'm seeing, could be as early as late 2018, but is something that might be more reasonable for 2019. So I think as long as these market conditions stay ripe for the large names and the unicorns to go public, we could definitely see this early next year. Seems reasonable to me. But I just wanted to kind of juxtapose Airbnb and Palantir, which seem to be definitely on their way to marquee initial public offerings, big IPOs, ones that Wall Street will certainly have their eyes on. But the tail of each company certainly, well, at least in my eyes, totally different. And the way that the public interacts with these companies, the understanding that the public has of the business models of either of these companies seems to me to be very different. So I just wanted to kind of juxtapose that and show two sides of the coin that we get with these private companies. On one hand, very consumer facing, and on the other, kind of cloaked in mystery, as I said earlier. That does it for this week's show, though. So as a reminder, if you feel that we missed something, or if you want us to cover a different story, shoot us an email at podcast@zacks.com. Make sure to check out all of our other exclusive audio content at zacks.com/podcasts. And remember to subscribe and leave us a rating on Apple Podcasts. We are also now available on Spotify. If you use that application for your podcast listening, just search Zacks Investment Research and you should be able to find all of our shows. Thanks again for listening to the Zacks Tech Talk Tuesday. We will see you next time.